What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Well, I hope you enjoyed my top 10 dividend stocks for you to check out and yesterday regarding dividend stocks that are less than $50. And I want to go over these monthly dividend REITs for you guys to check out for August. These are very popular dividend growth stocks. I'm going to go over the pros and cons of all of them. They're all in-demand companies and they're real estate investment trusts. So again, real estate investment trusts, 90% of what they make come back to investors. So people like myself, I don't have time to invest in certain real estate, and these guys do the job for me. So, that's one pro with these guys. The other thing is diversification. So these guys are well diversified, and it's always important to have diversified real estate investment trusts, especially when it comes to real estate. Because like an example I'm going to give you with Rich Uncles, I put $6,000 in, and if it wasn't for the pandemic, that REIT would have been rolling. I mean, it was all student housing and stuff, and they disbanded. Now luckily I didn't have all my eggs in one basket, but that's the importance of having strong diversification with real estate investment trusts. So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this out right now. This is a real estate investment trust that's very interesting. Gladstone Land Corp. And if you heard in the news with recent news of China acquiring farmland, Bill Gates buying farmland, this is a well-diversified real estate investment trust that focuses on acquisitions of farmland. So I did own these guys. I'll go over the pros and cons with these guys. So they have a dividend yield of 2.02%, average volume 269.66K, market cap 927.43 million US dollars. G range is 21.23 to 42.10, a major dip right now. Its day range is 26.11 to 27.45, and its previous close is 26.15. Now, honestly, again, this is not financial advice. It's for entertainment purposes only. Disclaimer in the description: diversification is important. And I really do think that these guys are a really good monthly dividend real estate investment trust, which I'll go over shortly with you guys. So what they're doing, they're kind of a new kid on the block. They're sucking up farms. Okay, they're acquiring farms. So if you go on their website, I have done significant reviews with these guys. And the thing is, which I'll go to their website real quick. So this is what they do. They acquire farms across the United States. And I think that these guys ethically and morally do a really good job with the way they do things. So for farmers who are selling their land, they offer long-term sale leaseback transactions, which allow them to free up capital to improve their farming operations. For farmers who identify land they want to farm but not own, they can purchase the farms and rent them to farmers with flexible lease terms. For sellers who do not own farm from the land, we offer cash purchase of the land while either keeping the existing tenant farmers in place or finding new farmers if needed. So I'll go over their portfolio real quick, but their philosophy is very important. Our goal is to build a premier farmland real estate company focused on the ownership of high-quality farms and farm-related properties that are leased on a triple net basis to tenants with a strong operating history and deep farming resources. All of our farms have abundant water sources and they're currently 100% occupied. That's important. Now I'm going to go over their portfolio real quick. So I'll just click one as an example. And I see all the time in the news their acquisitions. So right here they have in Nebraska a corn, sugar beets, and edible beans location that they own. And I'm telling you, in the news, I see all the time with these guys, their acquisitions. I think the one that I saw in Georgia, what was it? That's what it was. The blueberries. I saw this one with their acquisition date, and this is recent, 11/12/2021. 230 gross acres with 175 planted acres of blueberry bushes located in Georgia's Addison County. So these are certain type of crops. People need food. How many times I ate blueberries yesterday hanging out with family. So that's the thing with these guys, that diversification is very important. They are doing and selling products. These farmers are selling products that people need. And guess what? They're paying their landlord, and the Gladstone land is making money, and the money they make is coming back to us as investors. So I'll show you their revenue and their dividend history. Their revenue is making a killing. This is in millions US dollars. 2015, 1190, 2016, 1731, 2017, 25, 122, 2018, 36, 68, 2019, 40, 69, 2020, 5703, and then 2021, 75, 31. So that's a huge jump in revenue from 2015 to 2021. And again, these guys have products that are in demand. So that's what makes them a very strong monthly dividend real estate investment trust. Now let's go over their dividend history. Go over their distribution history. So 2014 they were 3 cents. 2015 they were 4 cents. 2015, 2016, 2017, 4 cents. 2018, still 4 cents. 2019 they were finally 5 cents, and they're still 5 cents. So the dividend growth is extremely slow. Now again, their acquisitions, they kind of a new kid on the block. So the number of dividend increases in the last 5 years is 20. Payout ratio is 80%. Annualized dividend growth in 5 years is 0.60%. So if you bought one share, you made 55 cents with a 2.02% dividend yield. So the one thing that turned me off is their dividend growth is not what I like. It's just too slow for me. I like a little bit more aggressive dividend growth. This is an excellent dividend stock. This is excellent traditional and/or Roth IRA material. I mean, look at how it's done is with price per share, and the diversification is a real estate investment trust that's huge, especially if you like monthly dividends. Now, I'm not talking these guys down. I think way too many positives over negatives. The only negative I have, honestly, for every 25 positives I have with these guys, I only have like 1 or 2 negative. And that the thing that I'm just a little bit turned off on is the dividend growth in the past 5 years is 0.60%. Now, if they get bigger as a company, and more acquisitions, hopefully the dividend growth is a lot bigger and more powerful. So, again, this is kind of a new kid on the block. So, I'm not completely dogging these guys, but if I like what I see, I might buy more shares. I love diversification. Dividend growth is just a little bit of a turnoff for me right now. Now, I sold them through a lot of shares in store capital, but in the long run, I still may buy these guys. So that I haven't completely said I'm done with these guys. I sold them temporarily, got a pretty good deal on store capital, and I'm still going to watch these guys all the time because, in the news, their acquisitions, there's a lot of positive news about these guys. I never see anything negative. So that's one thing to just keep in mind of. If you like monthly dividends, these guys are solid. Let's jump to the next dividend stock. And my next dividend stock, they don't need any introduction, Realty Income. They're sitting at $73.99, a dividend yield of 4.01%, a PE ratio of 72.52. And again, FFO is way more important than PE ratio. I don't really care about PE ratio. I'm more concerned about FFO with real estate investment trust. Average volume 3.54 million. Market cap is 44.51 billion US dollars. Each year range of 62.29 to 75.40. State range of 73.04 to 74.18. Its previous close was 73.29. So let me just go over these guys to a lot of you guys that are new and are new to these monthly dividend REITs. So I'll go over these guys very briefly. So the revenue has done very well. I'm not going to even jump to their revenue. Their revenue is phenomenal. That's why they're a dividend growth stock. Realty Income, known as the monthly dividend company, is an S&P 500 company and a member of the S&P 500 Dividend Aristocrats Index. Our goal is to deliver dependable monthly dividends that increase over time. These dividends are supported with cash flow from long-term net lease agreements with over 11,200 real estate properties around the world. So that is huge. So since their founding in 1969, they declared 625 consecutive monthly dividends and increased dividends 116 times since 1994 public listing. We continue to remain dedicated to our founding goal as we pave the way for the next 50 years of growth. Then here's our glance. Over 11,200 properties with long-term net lease agreements. 625 consecutive monthly dividends declared. 4.4 compounded annual dividend growth rate since 94, 15.3% compounded annual total since 94 listing on NYSE. So here's the thing, diversification. These guys appear to be very strong, pandemic proof and recession proof, as well as land. So I'm going to go over their dividend history real quick. This is what we like, raises. So let's look at 2018, 22 cents, and then 2019, 23 cents. Then a little slow, you can blame the pandemic in 2020, and then 2021, 24 cents, and they just cracked 25 cents. So they have a payout ratio of 80%. Remember, 90% of what real estate investment trusts make come back to investors. Number of dividend increases in the last 5 years is 23. Annualized dividend growth in 5 years is 3.04%. Big deal, okay? I'm telling you, I have over 100 shares, and I absolutely love the way things are going. So I want to start making $100 a month in these guys. I think that's my long-term goal, $100 to $200 a month, so I can start buying more shares. Again, I have a goal to make $1,000 to $3,000 a month on my monthly dividends and $2,000 to $4,000 a month on my quarterly dividends. Annualized dividend growth in 5 years is 3.04%. Annual dividend, if you bought one share, you made $297 with a 4.01% dividend yield. Very strong. Now, the cons are they're a little pricey right now. So if you bought the dip, you're capitalizing. A little bit of a slow dividend growth in 5 years is 3.04%. I mean, that's the only thing I can nitpick with the negative on these guys. But these guys are the monthly dividend stock for a reason. Let's jump to the next dividend stock. Next is another monthly dividend stock, which I find is a rival to Realty Income, very similar with their business philosophy. Agree Realty Corporation, they're sitting at $79.59, dividend yield of 3.53%, a PE ratio of 44.64. Who cares? Average volume 779.68K, market cap is 5.98 billion US dollars. A tier range of 61.62 to 79.82. Day range of 78.51 to 79.82, and its previous close is 78.99. I love these guys. I own them. I'm long in them. I'm going to describe and discuss why I like these guys. Every time I check their website, they acquire somebody. So they're getting a lot bigger and stronger. 31 million square feet, 68% investment grade. So I'm going to go over their portfolio. So a lot of the stuff with their tenants, Aldi, these guys are pretty strong. AMC, a little bit of AMC. Guess what, AMC? You got to pay your landlord. So these guys are a landlord to AMC, Applebee's, Aspen Dental, AT&T. So look at, I'm just in A, AutoZone, all the way down to AutoZone. I mean, look at how many AutoZones that they're a landlord to. I'm still going down. Still going down. Bank of America, Barnes & Noble, Bed Bath & Beyond, Bell Tire, Best Buy. So Best Buy has to pay their landlord. Big Lots, Big O Tires, Big R, Billboard, so BJ's Wholesale, Boot Barn, so Bridgestone, Firestone. So there's a lot of job security and a lot of demand with these guys. These companies that they're a major landlord to appear to be a pandemic-proof and recession-proof because they need that. People need their teeth cleaned. AMC, I don't say people need theaters, but people go to theaters to watch movies. So that's one thing that I want to address is their diversification is very huge. And the revenue's done very well. And now I'm going to jump to their dividend history. So here's their dividend history. They were a quarterly dividend stock. And a lot of people don't know about these guys. They were a quarterly dividend stock. And then they converted to a monthly dividend stock. Now check this out. Right here, at the start of February, now in 2021, they said we are going to be a monthly dividend stock. So the board of directors made a very gutsy call, and they became a monthly dividend real estate investment trust. This put them on the map. I never even heard of them until I did some digging. So 2021, 21 cents, and then 2021, 22 cents, and then 23 cents. So they're sitting at 23 cents. So dividend growth in 5 years is 6.70%. Payout ratio is 74%. Annual dividend, if you bought one share, you made $281 with a 3.53% dividend yield. So again, the dividend growth is a little bit better than Realty Income. Number of dividend increases in the last 5 years is 10. But the one thing that's little bit. They're in the top 17 rank, which is really good. But the only thing is, they're 79.59. So you better have a chunk of change before you start buying a monthly dividend real estate investment trust like this. Or you can just wait or dollar cost average or buy a huge dip and have money saved up to buying a dip. But again, you're getting monthly dividends and a decent dividend growth every month or every year. So that's one thing that I want to address. I own these guys as well. I'm going to be long in them. And I'm hoping on my M1 Finance dividend portfolio, eventually my quarterly dividend stocks will start buying these guys, and these guys can start buying other monthly dividend stocks as well as quarterly dividend stocks. So let's jump to the next dividend stock. And this one I think is a major steal right now. EPR Properties. It's sitting at 53.81. Dividend yield of 6.13%, a PE ratio of 35.58. Big deal. Again, FFO, average volume 384.50K, market cap 4.03 billion US dollars. GA range is 41.14 to 56.38. Stay range is 52.98 to 54.29. Its previous close is 53.25. So what I like about these guys, this is one I'm probably going to start putting money in. I can't confirm that yet, but with these guys still at a discount and taking a huge dip since the pandemic, they were at 70.86 in their prime, and now they're 53.81, slowly trying to rebound. These guys are specifically focused on entertainment properties. So, a little bit of AMC. They're a major landlord of AMC. The golf, the Top Golf and everything. They are, I'll just go to their website real quick because I just want to show you their portfolio. They have 200 plus tenants in 44 states and 355 locations. So right here, Eat and Play. They have gaming, fitness and wellness, cultural, experiential lodging, attractions, and theaters. They're a major landlord for AMC. Now, their portfolio dropped a little bit with private schools and early childhood education centers, but really, the thing with Eat and Play is these properties with Topgolf. Their partner Topgolf has been a leading Eat and Play concept in the U.S. So they have 57 properties, 8 operators, and they're they're just, I think the way these guys have done, it's just my opinion, but the way they have things going, especially ski resorts, they know what people like. They did their research, and if you look a little bit more in depth at their website, they have done their research and they know what they're doing. And this is why I really like these guys with their being an experiential REIT, and their success has backed them up. Now, during the pandemic, they suspended their dividend. That makes sense because, again, diversification is important, like I said. But, how are you going to go play Topgolf when you're in a pandemic and you're not allowed to go there because the CDC said you can't do that? Can't go to gaming. You can't go to anything. I mean, everything was locked down. I mean, I was very lucky to have a job, and I had my employee 403B matching suspended. Isn't that great for a hospital? They suspend your 403B matching, my 3% when I threw in 6%. But anyways, these guys took a hit. They took a major hit, and they're at a discount right now. They're a lot cheaper. And I bought, during the pandemic, a lot of shares of these guys. I knew they would come back with a vengeance eventually. So I'll jump to their dividend history. Their revenue is starting to jump back up. So I'll jump to their dividend history. Let's just start in 2017. So they were 34 cents. And then 2018, they jumped to 36 cents. Then they jumped to 38 cents. And then the pandemic hit. So about a year, they kind of resumed their dividend. That was kind of a given once they started getting a decent amount of revenue. So then they cracked 25 cents. And they're at 28 cents right now. So they're slowly coming back to where they were. The payout ratio is 85%. Again, real estate investment trust. Number of dividend increases in the last 5 years is 4. Dividend growth in 5 years is negative 4.71%. So if you bought one share, you made $3.30 right now with a 6.13% dividend yield. So that's kind of a given, aka common sense, that these guys would cut their dividend. I mean, nobody's going to go to these places, and how are you going to pay your landlord if nobody's going to your place to watch a movie like AMC, to play Topgolf, and you're not allowed to be in crowded locations because of a pandemic. In certain states, they were very crazy about what you can do and can't do, with lockdowns. I mean, very extreme. So, I just think some of their moves were a little too extreme. So let's jump to the final dividend stock. The final dividend stock is STAG Industrial. It's sitting at $32.78 with a dividend yield of 4.45%, a PE ratio of 25.82, average volume 1.29 million, market cap is $587 billion US dollars. Its year range is 29.43 to 48.27. Its day range is 31.97 to 32.81, and its previous close is 32.03. Now, these guys acquire industrial complexes. So that's one thing. What's very interesting with these guys. I'll go briefly over these guys, and then I'll jump to their dividend history because their revenue is doing phenomenal. So STAG Industrial is a real estate investment trust focused on the acquisition and operation of industrial properties throughout the United States. By targeting this type of property, STAG has developed an investment strategy that helps investors find a powerful balance of income plus growth. So number of buildings, every time I checked, they are increasing their buildings, 559. Again, diversification, monthly dividends. This is one thing that's very attractive. Now I'll jump to their dividend history. We'll start in 2014. They were 11 cents. And then in 2015, they were 12 cents. And they're still stagnant at 12 cents. Still, for numerous years. So, thing is, the payout ratio is 69%. Number of dividend increases in the last 5 years is 6. If you bought one share, you made 146, and the dividend yield is 4.45%. Annualized dividend growth in 5 years is 0.72%. So the thing with STAG is, I do own these guys. I'm long in them. I'm not going to buy any more shares for a while until I start seeing decent dividend growth. Now, listing these guys, all 5 of them are excellent dividend stocks. I think LAN is an excellent dividend stock. I'm a little turned off by the dividend growth. STAG as well. I own these guys. I'm not going to get rid of them because I like diversification. EPR Properties I absolutely love. And I also love and Agree Realty Corporation. So I think overall, I think that STAG would probably be number 5. LAN would be number 4. EPR would be number 3. AGC would be number 2, and then O would be number 1 on my list. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dark Dividend. You guys have a great Sunday. And I will post one on Tuesday. I may try to squeeze one in on Monday. So make sure you hit that notification bell after you subscribe or if you're a new subscriber. All right, take care.